What's going on, everybody? I'm going to go over a very specific trading model that is worth backtesting, looking into if you want to use the dots bias indicator or you're looking for a lead on a trading model that you can potentially make your own. So it is marrying the dots bias indicator on my left with NQ stats at probable Chris on Twitter. One of his statistics that he uses, the initial balance break. So basically, the initial balance is looking at the first hour of the trading session from 9:30 to 10:30. So the high to low, low to high, and you look to see where price closes in this first hour. So on this day, this is Wednesday, June 25th. Yep, Wednesday, June 25th. So basically, the statistics suggest that there's an 83% chance that the initial balance, high or low, will get broken before 12 p.m. Going further, if the price closing meaning the first where it closes at the end of the first hour, if it closes in the lower 50% of the range, the low was broken 74% of the time. So that's good information to know. So I like to marry those probabilities, those statistics with the dots bias indicator. So right here, you can see 10:30 close. There's a 74% chance that this low right here is going to get tagged before 12 p.m. So what I do in this situation is I look to pair a one dot entry function, which is shorting the close of a 1 minute candle that lines up with a column of all red dots. So I am just observing price with a bearish bias, observing price with a bearish bias. When the dots are mixed, I do nothing. You could see we came up to 50% of this range. I think that's a fib level, 50%, 61, 38.2, and so on and so forth. But if you see 50% of a range kind of wick and hold, that's a good sign for resistance. So I'm waiting for the dots to flip bearish, and I want to target the low of the opening range. So patience. Dots are mixed, do nothing. Dots are mixed, do nothing. We get a push higher. Statistics still suggest that 74% of the time over the last 10 years of data, that if the price closes in the lower half of the hourly range, that the low will get taken. So patience, you got to wait for your specific setup. So right here, the dots turn red, shorting that level. ATR is about 18 points, close enough for government work, targeting the low, and you just let it work or not. So you have the statistics behind you. The dots are giving you a bias, and that's all I'm trying to do is trade confluences. You can see the trade worked out. I want to stack confluences on my side. So the dots are good for a bias. If you're a retracement trader, we came up. You can wait for the dots to turn after the retracement. That's confluence. The EMA's turned. That's confluence. A break of the VWAP here. That's confluence. You just want to stack as many confluences in your favor as possible. So we were bullish all week. We're, as of this recording, the market is literally at all-time highs or nearly there. So this was actually a bearish setup inside of that. So this was an example of stacking odds, probabilities via at probable Chris NQ stats with the dots. And I think this specific trade worked, I think, every day this week. So you want to back test it. If you want to use the dots, that's cool. If not, that's cool. But this is an example of something I look for to stack confluences. There's a 7-day free trial for the DOTS bias indicator if you want to give it a chance. Code DOTS gets you 20% off a lifetime or a monthly subscription. So join the Discord. Would love to have you. If you have any questions, feel free to reach out. Thank you.